Why have final salary pension transfer values gone down? Okay, today we're going to be diving straight into the topic, explain why this has happened, what your options are, and potentially what we would advise you to do here at Cameron James if you are seeking authorized and regulated pension transfer advice for your final salary defined benefit scheme. Okay, so the reason pension values for pension transfer values have gone down for final salary schemes has very little to do with performance. The main reason values have gone down is to do with gilt rates. Okay, now gilt rates are obviously very closely linked to interest rates and inflation. As you have seen and in the markets and the economy, the UK economy, the US economy, every economy has had sky high inflation. Okay, now what do governments do in terms of the economic levers? If everyone has lots of inflation, if everyone has inflation, it means that everyone is spending their money. The way you stop people from spending their money and to slow down inflation is to increase interest rates. If you increase interest rates, people think, maybe I won't spend £1,000 on that. Maybe I'll put £1,000 in the bank because I can now get 3, 4, 5%, whatever it might be. That is the economic levers that are happening in the background here. So interest rates have gone up. What that has done is that has pushed the gilt rates in the UK, which is what the ceding schemes in the UK and the actuaries use when they're completing your CETV, cash equivalent transfer values. That is what they use, or one of the main factors they use to determine what CETV value they're going to offer you. Now, if we have a quick look here at the UK 20-year gilt rate. Now, I have to specify not every single trustee in the UK uses the 20-year gilt rate, but in my experience of working with numerous final salary DB schemes, the majority of them seem to use the 20-year gilt rate. And also, just a little point as well, they don't monitor it each day live. What they actually do is they normally say at the start of each month, this is the rate we're going to use for the month. Some of them do it quarterly, but the majority of them do it monthly. So as you can see here, the current UK 20-year gilt rate as of the 3rd of December 2023 is 4.671%. Now, what I've done with my screen here is I've zoomed it out for an all-day period. Okay. So what you can see over the course of time is how that gilt rate has changed. So if we go back here to the start of where the chart begins in 2006, you can see gilt rates at around 4%. Then what happens is we approach 2010. Now, we all know what happened in 2008 and 2009 with the global financial crisis. Economies around the world brought interest rates down because they wanted to try to stimulate. They wanted people to go and spend their money to help recover the economy. So interest rates came down to basically artificial lows in the UK and most jurisdictions. Now, this then continued for a period of years. So you could say there was something of a sweet spot in the period of years passing in sort of 18, 19, and particularly 2020, when again we had the pandemic. The UK government brought the base rate in the UK down to 0.10%. That's ridiculous. No global economy can survive on that. What we've had since then is that interest rates have obviously spiked up to where we are now. And obviously, again, I have to be clear to you, interest rates and gilt rates are slightly different things. But as you will see over the course of time, they track one another quite closely when we look at the 20-year gilt rate. So if you got a CETV in 2020, okay, you might be saying, oh God, I can't believe I didn't transfer in 2020. My CETV now in 2022 or 2023 is half what it was in 2020. Yes, that is true. However, to make yourself feel a little bit better, what I can tell you is, even people in 2020, when I was saying to them, Jesus, you have the best CETV I've ever seen. You should really talk to the pension transfer specialist. We use an independent and third-party pension transfer specialist here at Cameron James. You should really have a conversation with them to understand about the suitability of your pension transfer out of your DB assets. The majority of clients were obviously extremely cautious. The world is going through financial pandemic. The world is going through crisis. No one wants to move. Not many people wanted to move their final salary schemes. Again, I just need to clarify there that just because someone has a high CETV or a good multiple of what their scheme is offering as an annual pension, that alone is not good potentially transfer rationale to the pension transfer specialist, who has to look at a much broader range of factors in terms of the guaranteed income for life that you're giving up from your defined benefit scheme. So here you are. I'm going to share a couple of examples here on my screen as well. This is from This Is Money. My pension transfer value has plunged from 740,000 to 340. What's happened, and is my early retirement dream over? Steve Webb replies from This Is Money. what people have to try to understand is you should not be anchoring yourself on, oh, in 2020, when interest rates were at all-time artificial lows, and I was offered 740,000 in this instance, I'm now being offered 340,000. You shouldn't be using a minute point in time of a pension transfer value to have your world view of whether you have a good CETV now or not. It can be argued that during that period, you were just being offered something ridiculously good. It doesn't necessarily mean now that the transfer value being offered is poor value. Again, the pension transfer specialist will be the one to go through that and discuss that with you. But as I've mentioned before, your CETV value in itself is not the most important factor. Now, I know from talking with clients and dealing with you every day, for you guys, it is the most important factor. You want to have a good deal out of your scheme and feel like you got one over on them because you worked for them for such a long period of time. But from a pension transfer specialist perspective, there's many more factors that would go into that. So I hope this gives you a bit of a breakdown and understanding of why transfer values have gone down. But what I can say with all certainty is, if you are still considering or want to understand whether it be suitable for you to complete a transfer out of your DB or your final salary pension scheme, you need to talk to a pension transfer specialist in order to assess that. And obviously it's not just me saying this, the UK, the FCA and TPR have made it legislation that obviously any pension transfer values over £30,000 of safeguarded assets must go through a pension transfer specialist. However, what is really important is, it may well be that gilt rates decide to come down, not decide, they're not a person, but gilt rates will almost certainly come down as inflation eases and as the government looks to reduce interest rates in the UK and the US. The US is basically the barometer. Jerome Powell was not a very popular person in the past 2 years. Many people said he was pushing the economy off the cliff. Well, I see inflation coming down dramatically in the US, far more than some of the other counterparts in the UK and Europe. So interest rates might start to come down. This means that UK gilt rates, the 20-year rate, might also start to come down. You can't guarantee this, but what you need to understand is, understand who you want to work with and what financial advisor you would use if you wanted to transfer your final salary pension. Don't wait for gilt rates to come down and then suddenly say, oh right, now I need to find a financial advisor, I need to do all my homework and research in 1 week because I see where gilt rates are at. Now, no, do that homework in advance. Some of our financial advisors have ongoing relationships with our clients for many months. So technically it's not an ongoing relationship, it's an email exchanges over the course of time while they're doing the homework, so they're in an informed and educated position if and when they want to pull the trigger on obtaining safeguarded advice for their final salary pension. I hope it's been a useful video for you, answers the question clearly. As always, please like and subscribe to the channel. It's the very best thing you can do to help me out with the videos. And as always, take care with UK pension assets.